Yeah, good morning, everybody. Wednesday, April 2nd, the day after April Fool's Day. What are they calling it today? Liberation Day with the tariffs? Well, let's talk about GameStop. What did GameStop do? Well, we talked yesterday or a few days ago just about the note, the offering, and that completed yesterday. We got notification via the SEC website. So GameStop completed that. So we're going to pull up that filing here. And what was interesting too, if you go to the main splash page, I had shared this, that indenture document, which is just their agreement there between the U.S. Bank Trust Company. I love the titling of that document. WK Project Rocket hyphen indenture C. Project Rocket. So what is Project Rocket? Could be something internally GameStop dubbed. Something they created as part of their Bitcoin investment policy. Maybe Project Rocket was something they used. Maybe it was to the moon, rocket to the moon. You never know. I just thought it was interesting when we see that filing come in just to talk about the sale had closed and the net proceeds, but just that the document name was Project Rocket. I thought that was pretty interesting. So, into the hype, you can take it for, with a grain of salt, obviously. I just thought it was very interesting, though. So we'll pull up that document here real quick from the SEC website. You can just Google SEC Edgar, EDGAR. That's the website. And you can just put in GME, and then you can see all the SEC filings. Another way, alternatively, you can be on the GameStop website, and then you can see the SEC filings that way. I've just always used the SEC's website. So they did complete on April 1st, and also we did note that the exercise in full of the initial purchaser option to purchase up to additional $200 million of the notes. So that did happen, the full additional amount. We talked originally, the conversion rates for the notes will be 33.497 shares per 1,000, and that was equivalent to initial conversion price of $29.85, which they took from the VWAP back on March 27th. So that's why that carried that 37.5% premium. That's that price. $29.85 is 37.5% higher than that VWAP on March 27th, which was that volume weighted average price. We talked about that during last week's videos. We summarized that a few times. So here on the proceeds, actual net proceeds from the offering did total $1.48 billion. So in addition to the 4.86 that GameStop already had, another $1.5 billion. So now they're over $6 billion in cash equivalents. Not too shabby. The other thing I wanted to discuss here as well, basically the company offered and sold the notes to the initial purchaser in reliance on the exemption from the Securities Act, blah, blah, blah. The notes and the shares of common stock issuable upon conversion of the notes, if any, have not been registered under the Securities Act and may not be offered or sold in the U.S. So basically they're just not registered in that regard. However, to the extent that any shares of common stock are issued upon conversion of the notes, they will be issued in transaction anticipated to be exempt from registration thereof, because no commission or remuneration expect to be paid in connection with conversion of the notes, and any resulting issuance of shares of common stock. So initially, a maximum of 69,087,450 shares of common stock may, that's using that loosely, may be issued upon conversion of the notes based on the initial maximum conversion rate of 46.0583 shares of common stock per 1,000 principal notes. This is subject to just customary anti-dilution adjustment provisions. That was just what was listed there from that filing yesterday. So just wanted to go over that. But let's take a look at the chart briefly, and then we'll take a look also at some of that option flow. We'll pull up, you can notice we talked last week about the short volume as they were selling the notes. The note buyers and those working the arbitration and the hedge desk are short sell the stock. So you can't just pull the 1.5 billion out of Wall Street without something. So basically, in the idea of like a convertible note, like arbitrage, a strategy. I shared this also over the weekend. So if you didn't see that post, it is on my X here. Let's see here. Let me share that over the weekend. Yeah, convertible note arbitrage. And then I linked also to Investopedia. I would encourage everyone to read that. Just might help understand more what was going on in returns to shorting the underlying stock while they're simultaneously buying the notes. You see that short volume spiked, and everyone talked about it on March 27th, and then March 31st, and then yesterday. So short volume, let's see, 4.5 mil on the 31st, and 5.6 million volume short volume. So I mean, still higher than it has been, but still a byproduct of the arbitrage here. And more than likely will clear itself up in just due time. So when you take a look at some of these moving averages over there in your top left corner, we'll see the 9-day EMA at 23.43, still out of reach there. The 21 EMA at 23.92. You got the 200 SMA lurking up there at 24.89, and our 50-day at 25.16. So well below moving averages. I know with the volume there, the last few days really kind of skewed the volume on the chart in that regard and how that looks. So definitely some high volume. I know a lot of people are excited up here and not excited here, but still excited now that GameStop's raised another $1.5 billion. So let's take a look at some of that option flow. What happened on Tuesday? What was traded? So we take a look here at the net put premium. Let's see, a little bit light, negative 340K. Net call premium, also negative 750K. So we'll take a look at it. So net premium by expiry was going down a little bit on April 4th, April 25th. The bulk of the net premium on December 17th. And I think that derived from these $55 calls that were coming through on December 17th. So we're looking here at net impact. So just because a lot of things here top chains by volume, I've actually got it sorted to take a look here at the highest net impact. So we'll take a look at that. We'll break down some of this flow here as we get you going for your Wednesday morning. It's about 7:30 Chicago time, 8:30 New York time. So a little bit ahead of the opening bell here. So we'll take a look here. Here we are, highest volume contracts. Here's your volume. Here's your contracts. You're welcome to pause, screenshot, do what you need to do here so you can take a look at that. So we'll drill into some of these here as well. See, a lot of them were short dated, 23s, 30s out of the money, 25s this week, 23.5s, 24, 22. Those are in the money, 22.5 in the money. Saw those puts on there. So 80% at the bid. More than likely was selling some of those $20 puts yesterday. Yeah, I thought I saw that come through. It's about $20,000 worth, $20,000 worth. Someone selling some puts around $10. If they think the stock will close above 20 by Friday, then they'll more than likely keep their premium and nothing lost. So nice light 20 G's for the week. Not too shabby. But, you know, if you were selling that, for example, say you were selling a $20 put, just one $20 put, you're going to need what it would cost to buy 100 shares at $20. So you would need basically on your account, you would need at least $2,000 cash to sell like a cash secured put. So you would need $2,000 cash, and you would sell one put for $10. So you're making $10, but you have $2,000 tied up in risk. Not that large of a reward, but if you feel the stock will close above 20, certainly a safe bet for your $10. So we'll take a look at some more of these here. Take a look at like the 23s. Let's clean up that timeline for them. So I did see some alerting yesterday for volume larger than open interest about midpoint through the day. The range on these was around 50. Let's see, what was the low down there? About 50 to about 90. So there was a little bit of movement. Like I said, there was about 14,000, near 15,000 volume, almost $1 million in total premium yesterday on that particular $23 call. But only about 3,300 appeared in new open interest. So kind of split yesterday between buyers and sellers. Those calls are slightly out of the money at this time. So we'll see how that goes. Could be just still playing the volatility. Because the IV is still up pretty high, 93%. So let's take a look at those $22 calls because those did close in the money. Similar story. You saw some volume yesterday. That 5,138 down here. But 172 less in open interest this morning. So you had about $500,000, a little over $500,000 total premium. You see the bid, a little more bid than ask, and then nothing appear new open interest. Could have been selling, closing. So we zoom out a few days here. It's always best sometimes to take a look, kind of zoom the contract out, which you can do on unusual whales, to see kind of where that activity and really heat it up. Let's see, around the 27th. So we'll zoom that back in. And just kind of, those were up there too at one point. 750 on the 26th. And then boom. Yeah, because the stock was trading around, 28, 29 that day exactly. So then they came down and just seen some activity. But if you stretch it across 7 days, bid 11,000, a lot of selling, a lot of buying. So mix between buyers and sellers. And like I've said many times, contracts trade hands. A lot of times the option flow can sometimes be noise and that it's not directional per se. Like the 30s, for example, looks semi-directional in that the ask volume a little bit larger than would be the bid volume, but not necessarily the case. You can see a pretty big hit there on that candle, but there's also some big candles. So when I see this like quickly, I take a look at that and I see, okay, maybe sold here and then bought them all back here. I see that doesn't necessarily mean that's what happened, but sometimes is what you want to look at. So let's see, it was volume yesterday, 3,500 bid, 10,000 at the ask. So we look at that volume yesterday, 14,000, about 8,300 new open interest, suggesting more on the ask than the bid, 100,000 in total premium. So yeah, some of that probably did appear as new buyers this week bought to open. Very cheap price contract, but the IV is destructive at 178%. Good if you're selling high IV, not necessarily good on the timing buying high IV. And the reason I mean that is the $6 contract to be $3 instantly. So if you're selling it, great, right? You're 50% up. And if you bought it, you're 50% down. So you got to be careful out there, especially anything short dated. I've stressed this enough since last year. You're on your own playing Russian roulette with short dated contracts. You've got to be able to execute quickly, have a plan, gather your emotions, and make sure you execute that plan and you trade on that plan because things can get away from you very quickly. We talked about those $20 puts as well. So let's take a look and kind of summarize the contracts in regard to like where was the bulk, the highest money. Because like before, I've liked to sort these so we can look at where the highest amount of money was actually spent on the premium here. And I thought I did see that. That was pretty large there. That's $6 million. We're going to look at that as well. On the $75 puts, those are clearly deep in the money puts. But the reason, for example, say you were selling this $75 put here, it's deep in the money. You may not worry about your shares being called off at $75. Highly doubt somebody wants to exercise that and get the shares at $75, but that would be your protection, and that you're selling a very deep in the money put. 235% in the money. Let's see here what was going on. Bid 378, mid, no side, ask. So this is where you get one of them funny fills, more like a floor trader. And there's been some premium here. This could be the arbitrage relating to the notes. The only reason I say that, the chain's been dormant and quiet with an OI of 30. Okay. Then all of a sudden we announced the offering. Mid. See, none of them are multi, so it's not like necessarily a multi-leg trade. A lot of mid filling. So we have to pull that up here a little deeper. 6 million premium. Contracts over $5,000. $52 a contract. Let's look at one of those fills here. One of the larger ones, just so you can see what that looks like. A lot of people talk, the option flow. Unless you got unusual whales, you're not getting every single order in real time. That's what we pay for with unusual whales. Part of that subscription cost covers that live data feed you're getting, which is the actual tape for options. So every single option, whether it be 1, 10, 15, 100, 10 million, they're all pinked and they're all transacted. So we look yesterday. I just try to look at these prices here in relation to the bid and the ask, which being they're the only person in that, they could be controlling the bid and the ask. So even though the spot is closer to the bid, see in this scenario, 52.35 is the bid, 52.95 is the ask, but it filled at 52.80. A little closer to the ask, which is why it's denoted as ask. Now, see the 52.85 here? A little bit closer to the bid, so that's why it's denoted in unusual whales as bid. So it's auto executed. Part of a, let's see here, transaction was the execution of an electronic order which was stopped at a price and traded in a two-sided auction goes through an exposure. Such auction mechanisms include not limited price improvement, facilitation, or solicitation mechanism. So just single legs coming through, 20 at a time. Yeah. Like I said, they're in the money, so no real worries there in that regard on that strategy. And January on the expiry. But yeah, interesting. 6 million total premium. It's seen some premium though. OI a little bit changed there, so could be using the arbitrage within that. Yeah, very interesting. So we do the math on that. So let's see here. 75, 52. So the current price 52, and then your 22 gets you roughly around 75. So see how you look at that. For example, like GameStop here, $22.40 a share. That contract at 52.63, roughly together is $75. So that's where you get the math in that regard. So it's not, these numbers aren't obscure. These numbers do come from somewhere. So when you see the fill 52.13 and then the price, that equals the 75. So the IV 84% on those. Let's see what some of those original C50. Let's zoom this all the way out. We'll look at the full 90 day on this. It's just like I said, it had been dormant up until that offering. So yeah, very cool to see. And that's the type of stuff that you can see with unusual whales. So let's back out of that here for a second. We talked about the 23 calls for this week. Let's see, 15 puts as well. Out of the money. And let's see what they've done here the last day, because that's when the activity was. About $750,000 there. A little bit of ask volume, a little bit of bid. Let's see, let's check a look. 3,600 volume yesterday. About 3,000 appeared new open interest, which might carry that particular ask. So 15 by January 16th. So if you thought GameStop would stay above 15 all the way until January, you could sell those, and they were about $210 a contract that you would be receiving. Or if you felt GameStop was headed for a further decline, you were paying $210 a contract for a $15 put for January. So that's what we saw there. And those $55 calls for December, I saw those being purchased as well. See 660,000 total premium, 1,000 volume, 1,000 appeared new open interest. So if you look at that, most of that appeared new open interest. Let's see though if that was. Let's take a look here. Okay, so been a little bit of buying there. And very unusual whale is very granular. I can dig all the way down to the individual fill if you wanted. So we're definitely putting up some $55 calls for December. CIV at 83%, not too high, not too outlandish. But this is a new chain that was added last week, so you'll see that sometimes. New chain get activity right off the bat. Maybe something, maybe nothing. $55 call is kind of out there. You know, it's 150% away out of the money. $65 calls as well. They had been there. We had seen some trading of those, like last week we saw some selling and buying back, like I saw on the 27th. It looked like more selling than buying, and then some of those bought back to close. So we see yesterday about 1,500 on the volume, a lot of that at the bid, selling $65 calls for January 27th. So if you didn't think GameStop would go over 65 by then, you could sell one of those calls. Against your position, they were paying $400 a piece, $433. So that particular transaction right there, if you own GameStop shares, say you had, 100,000 shares, whatever you had, and you thought, or 10,000 or 1,000, you thought, hey, I don't think GameStop will get that high. $65 by then, I'm going to sell these calls, and write out that premium, $433. And then if it did go to $65, you would just have your shares sold at $65 each, but you already received $433 in premium up front, which is about, $4.33 a share. So you probably wouldn't do too bad on that deal. So just remember, like I've emphasized before, not everyone's buying calls, people sell calls. Not everyone's buying puts, people sell puts. Not everybody is long a stock, they're short a stock. You see it. Let's take a look. These 25s for June did appear as well. About 2,000 volume, a little under half of that appeared new open interest. See, when I see this here, I see buy, buy, sell. That doesn't necessarily mean that was what happened. But if I bought here, 290, 315, 292, so maybe 274, not much range there. If you bought here thinking, yeah, okay, I'm going to do this, 315, and then fell, I don't know. Sometimes you just don't know because it's like I said, you see volume here, bid and ask. You got to always watch the actual fills themselves for what the price was at the time. So of the 2,000 of the volume that carried, like I said, 2,000 volume yesterday, about 750 in new open interest. But some of that with the bid, but some at the ask. So contracts trade hands. So just something to watch because these 25s had been up for quite some time for the Junes. They were around 300, in early March, and then following earnings, they ran up to about $675. Dipped back down to what, 250, and then 330, and then dipped again 230 when GameStop went around $20 and some change, and then 310. So a lot of buying and selling of the June expiry as well. 22s for this week, we talked about those in the money. 25s for October, those we did see some activity on that as well. So let's drill into that for a second. Again, split there between the bid and the ask, split between buyers and sellers, but 500,000 total premium, 1,100 volume, but only 500 new open interest. So bid 5, it's hard to say, what of that? You don't know. Like I said, contracts can trade hands. If I say I sold to open right here yesterday, 233 contracts at $500 each, and then this, they fell down to 475. I might have bought all those back, but then I bought them back from somebody else that might have sold to open just to me because you can't have a buyer without a seller, and you can't have a seller without a buyer. Contracts just don't come out of thin air. Now, our market makers do naked calls. Sure, I'm sure they do. But that's more on their end for hedging against common shares. Your retail trader, though, is more than likely buying calls or selling covered calls. You see it. We talk about it. You see it online. You see people post. And then the 30s, we also saw that initial hit for January. Let's see, 210,000 right off the gate yesterday at the open. On the bid, let's see, bid 669 volume, ask. It's a little bit more bid than ask. And you see some of that carried over in new open interest today. So open interest increased 652, which is kind of right around that bid. So somebody might have thought here, well, I'm going to sell these $30 calls while the money's good, while the premium's good. And then they said, well, if GameStop goes over 30 by January, I'll lose my shares at 30 each. If it closes under 30 by then, I'm going to keep the $465 all the way to the end for each contract. So, yeah, I try to show both sides of the trade. It's not just buy calls, wait for it to move up. It's also sell calls. I'm a big fan of sell high IV and buy low IV. So if you want to take a screenshot here, here's your premium column, sorted by highest premium. Then here's your actual contracts, your expiry, your strike, the volume yesterday, the open interest. So if you want to take a screenshot there, record, see if I can zoom it in a little bit for you, if that helps you. Then you can take a look what was there. We'll take a look at those open interest changes as we wrap this up so we can get you going for the rest of your Wednesday. So let's take a look at that. What changed on the GameStop? Take a look at our largest open interest changes here. Let that load up. All right, here are your largest changes here. Give you a zoomity doom doom, zoom zoom. And then you say, well, welcome to take a screenshot there. So, you've seen me post in the past, largest increases to open interest, largest decreases to open interest, your largest increases. So you see the 30s, the 23s, 25s, all for this week. The $15, $10 puts, we can look at that activity as well because they did carry over a little bit. So the $15 put, we talked about that, I know, for yesterday. I'll zoom out here so it's not all in your face. Yeah, and that's what we had talked about yesterday, the $15 out of the put. or out of $15 out of the put, $15 out of the money put, the 2,900 new open interest. Because I didn't think I caught that other one, the $10. Maybe we did, and I passed over it already this morning. See, that was a no side fill. 2,500, 25. No multi. The mids are always interesting, so let's actually look at it. 2,500 as it come across the tape here. Okay, so it's a cross trade. Cross trade occurs when a broker executes match buy and sell orders for the same security but across different client accounts and reports them on an exchange. So what that means, could have been a collective against other accounts and then boom, process it as one order. So that was a cross trade. I usually will filter all of that out, but sometimes I'll leave everything open as well because it's important to see, the full activity. And sometimes when we use this stuff with like unusual whales, we can make that easy change there. So we go up here and we can adjust our filters, for example. And you can filter all of those out. There's multiple things that you can filter. You don't want to, look at mid fills, or you don't want to look at cross trades. You're only looking for ask, or you're only looking for puts. So kind of have some flexibility in that regard. And let's look at the decreases. Any changes there? The biggest decreases to the open interest this morning. $20 puts, some of those come off the table for April 4th and for April 17th, 21s. So unwinding a little bit, nothing too outlandish. You're welcome to screenshot and investigate any of those as well. We'll pull up the $21 put. Why not? Because we can. See, I mean, there's just not much money there. 76. I'm not saying it's not a lot. It's just not a lot in the grand scheme of the option premium as a total. So if you look comparatively, let's take a look at just how the option premium, like total premium, is stacked up this week in comparison to, say, last week, right around earnings and the announcement of Bitcoin, which opened the door for the arbitrage. So let's see here. April 1st, net premium 6.5 mil. Total premium 175. Oh, pardon me. That defaulted back to Apple. Holy cow. Because I was like, no, we just looked at that. That was not that large. I do apologize. Everybody's like, what? He just said 200 mil up? No, I know. I jumped the gun. Let's see here. 414 net premium yesterday, negative. 25 mil total premium. I mean, you can see that, right? Earnings, boom, boom. Big money right there on the 27th, 159. But the net premium, negative 30. So we had it was good here. The grass was going good. Things were lining up good. We saw this technical setup occurring here on the 25th as we tested that 50-day. And then earnings, yay. Shot up here. What, 29.80? I should have known whether it was going to be an offering. I thought it would be a common stock offering. That was my gut. And then the Bitcoin offering came out. I was like, oh, well, here we go. So we'll see what it does. Let's see. As of recording, we're about 45 minutes from the open. Currently trading at 22.37 on GameStop. So that's what I got for you today. Did we cover everything? Project Rocket. Yes, we did. Let's look at it one more time. Project Rocket. That's hilarious. I still find that funny. I did see this just come in this morning when I started recording. I came in shortly after I started recording. It was a 13G on GameStop, which usually is for ownership of over 5% or more. I'm like, oh wow, who bought a bag? And I look, Turker ahead, or Turker Ehad, 128,000 shares. What? In Albania, let's see, see instructions. B, 0% ownership though, so I mean, I'm not sure. Percent of class, 0.02888. So, yeah, 0.0288 of 1%. Yeah, I'm not sure. They have 128,000 shares. There's retail investors that got more than 128,000 shares. So, with sole power of 28,000, amount beneficially owned. That's weird. That's an interesting filing. Okay, well, welcome. You got yourself 128,000 shares. Could be selling calls. So, you got to think, too, when you think all the liquidity for options, just remember who some of your largest option or some of your largest stockholders are. You got Roaring Kitty. Who do you think's providing liquidity week in and week out on calls? So if I'm Roaring Kitty and I got 9 million shares, I'm definitely selling calls every single week to generate income on my position. Why? Because I don't know why you would not. You've got such a large position. What his average is $23, so he's a little below, but we don't know what he's done since his June update last year. He was transparent up until June last year with his 9,001,000 shares at what 23.41. So if he bought more, we don't know. He hasn't said anything. I would have thought we would have seen him pop up just with everything going on recently, and he's been quiet. So two things: I can either think he's quiet because he just chooses to be, and he's just raising his family and living his best life, collecting option premium. I don't know if he is. I'm just saying you can't have all this liquidity in the GME option chain without people owning the stock and then selling calls. You don't just buy calls, you're buying them from somebody. So, Ryan Cohen, he could provide liquidity. Is he selling calls under his personal account? It's his choice. So yeah, I mean, maybe the SEC got to Roaring Kitty. Maybe last year they were like, you're done. But what did he do? He posted videos, so what? To each their own. Wall Street's here for the taking. It's up to you, what type of mentality and what type of emotion you're going to check at the door and what type of money you're trying to make and your opportunity. As with anything, it's always best to manage your own risk. You can hire somebody for that to manage your risk and your finances if you don't feel the best about it. And I would encourage anyone to do such. But that is what I got for you today. Like I said, go back, read a little bit more about the convertible note arbitrage. I think it may help some folks understand just the bigger picture. I know sometimes I work better with a visual. So yeah, you can take a look at that. The Project Rocket. And I do appreciate, yesterday I said if this post gets just one like, just one, I'll post a new GameStop video on Wednesday morning. Thank you. I just said one, not 258. But I do appreciate that. And everybody that did tune in. Also, if you're interested, we're not going to boost any posts here. And also grab yourself a discount at Unusual Whales if you are interested. If you're not, no big deal. You can sign up as a free subscriber. All your data is delayed and you don't have as much access, but it is free. So that is what I got for you. Happy Wednesday. Longer video, I know, but they're always going to be long. I'm long-winded and can't really get it all out in a short amount of time because I don't do this off a script. I go by what I see and then we talk about it. But I do appreciate everybody. So if you watched it all the way through, why don't you leave the reply to this post? I watched it all the way through. And I'll know that you did, and you're legendary. So if you have any questions, send me a DM, reply, and I'll see you around the internet because I'll be out there. And y'all have a great day. Manage your risk. As always, I'm here to help. I just want to see others lose less and win a little bit more. That's the name of the game. You all have a fabulous day.